Okay, so welcome back to part two. This is where we take a look at the week ahead. So this week, it's PMI week. You know, there's loads of countries have got their PMI being released. And of course, we've got some central bank meetings, which is going to make it a great and very interesting week. So there's just so much data coming out from the US this week. We've got PMIs coming out, we've got housing data, consumer confidence. You know, I love consumer confidence because that gives real insight into if consumers are ready to and prepared to keep spending or whether they're cutting back. And you know, there's so much going on in all these economies, and of course, that so much of it is impacting us personally as well at different levels. We've got the Richmond Fed manufacturing. Of course, manufacturing sort of has been remaining under pressure. And then the sort of, obviously, the key part of the week, we've got the FOMC on Wednesday. And you know, it just seems as though it's got to be another 0.25% and then a sort of a sit on their hands and wait. Depends on, you know, it's just going to be database going forward. So they've probably got another one in the pipe if they need it, but again, it's just going to be dependent on the data. And of course, which is going to help there is the PCE that comes out this week as well. Then durable goods, and you know, durable goods, these are the bigger ticket items. You know, they're a bit more costly. You know, these are items that have got a life of at least 3 years, or they should have. So you know, again, so if that's going up, again, it's you know, people are prepared to spend more of their income on bigger items. It's again gives you that confidence, or that they have got the confidence to go and do that. And then we've got GDP, and then initial jobless claims. You know, so I keep adding this in because obviously initial jobless claims comes out every week. But for me, that's sort of giving real strong insight into what's going on within the jobs market in the US, because you know that is going to be for me quite a big indicator going forward, especially as that number starts to increase. Although last week it was a surprise, it was a drop on expectations. And then we've got personal income and spending. Then Chicago Purchasing Managers Index and Michigan Consumer Confidence. So again, you know, more consumer confidence there. And that's, you know, for me, that's just so important. You know, we as consumers account for 60 to 70% of an economy. So if we're not confident and we don't spend, then that means contraction. If we've got that confidence and we're willing to spend, then it either keeps the economy steady or can lead to growth. Then moving on to the EU, again, PMIs coming out there. And of course, we've got the ECB rate decision and consumer confidence. Now, ECB rate decision, again, is expected to be another 0.25%. Inflation still too high everywhere. It's you know, it's getting closer, but the closer it gets to that sort of target rate of 2%, the harder it's going to be to achieve. And there are some sort of underlying fundamentals that may stop that from coming down as expected, namely the weather, number one, and number two, Russia's leaving the little pact that they had, which opened up that corridor, which allowed Ukraine to export grains. You know, Ukraine is a massive exporter of grains, so that's going to be a big impact on them for their economy, but it's going to be an impact on the world as well for the amount of wheat and corn that's available. And of course, after Russia pulled out of that agreement, they started attacking the Ukrainian ports. And also their supplies, you know, their storage. So yeah, so you know, there's still potential that you know, inflation, if the grain prices pick up, then that could lead to just a little bit more of a pop in inflation again, which obviously nobody wants to see. Then in Germany, we've got IFO and CPI. UK, very thin on the ground. It's only got the PMI coming out. In Canada, we've got GDP. In Switzerland, we've got ZEW. Japan, we've got PMI. We've got Tokyo CPI. So just keep an eye on them, because this week is also the BOJ rate decision. Not much expected there. You know, they could play around with the curve a little bit more. But, you know, I just hope and I hope and believe that by the end of this year that they could well go back into positive interest rates, fractionally, of course, but they could get there. And then in Australia, we've got a bit of data coming out. We've got PMI, followed by their inflation, CPI and PPI, and also retail sales. So it's going to be an interesting week, especially with the Fed and ECB meeting. Key data, PCE, you know, it's the Fed's favoured inflation metric. So yeah, so expect a lot of activity in the markets, but it should also sort of clear the path a little bit and give more insight in what we should expect for the future coming months. Okay, so hopefully you've watched part one. So I'm not going to bore you and go through all of this individually, but you know, we're here to help you in any way that we can. So this is why we help to prepare you for the week ahead, doing these and the daily newsletters. It's why we provide loads of different workshops and courses to try and help you either to get into trading or improve your trading. And of course, then we've got all the other things that we do. And one of them does include having a go at a funded trading account. Now, you can either do that directly by going to Nordic Funder, and there's its details, or we've got a couple of courses where that's attached on as a free challenge at the end. As usual, contact us at info@symaxfintech.com for any details you would like or any questions you may have, and my email is chris.tubby@symax-int.com. Hope to see you in part 3, where we look at my macro outlook.